Steven Saywell, BNP Paribas, Senior Multi-Asset Specialist. I have no idea what that is, but he's a Senior Multi-Asset Specialist. And here is trade-weighted sterling with a really not outlier call, but a respectful call down 5%, weaker sterling. The blue circle, Brexit. The red circle is the BNP Paribas call of migrating down to weaker trade-weighted sterling, getting it below where it was in 1992. Steve Saywell, is that wealth destruction for the United Kingdom?
Well, it could actually be wealth creation. It would certainly help UK exports. But look, the key theme we're focusing on here, Tom, is the Bank of England. The market is very convinced that they hike in November and maybe hike again next year. We actually have a very controversial call. We think they will not hike.
Why not?
Well, the key reason for this is we think growth is going to turn over, weaken somewhat. So our call for UK GDP next year is just 1%. So it's quite a bit lower than consensus and quite a bit lower than what the Bank of England thinks. So our view is that, yes, we've got a temporary spike in inflation. We saw the numbers yesterday. But this is nothing new for the Bank of England. We've had inflation as high as 5% in the past 10 years, and the Bank of England has looked through it.
But, Stephen, at the same time, this would just be a reversal of the emergency cut like August, and if they telegraph that, then why not hike?
You could argue that. You could argue that would be the case. But I think the key point we would highlight is the Bank of England continues to be watching data, continue to be looking at incoming numbers, and since they started to telegraph this rate hike in November, the economy has weakened. Looking forward, there's still a lot of uncertainty over the Brexit negotiations, which we have been speaking about. This is not a time, we think, to be hiking rates in the UK.